RightCapital's Estate Planning module, located within the Estate Analysis tab of each client plan, provides insight into what is projected to happen to a client's assets after they pass away. Here, you can visualize how assets will flow to a surviving spouse and eventually to the client's heirs, all in a dynamic environment. By default, there are 3 tabs located within the estate analysis: Flow, Comparison, and Details. A 4th tab, Trust, will appear if there are any irrevocable trusts entered within the plan. In this training video, we'll explore all 4 of these tabs, in addition to action item functionality and how you can both model and analyze trust strategies. Before we get started, an important note. The values that flow into the estate analysis will be based on the original proposed plan in the Retirement Analysis module. Any changes that have been made to the proposed plan within the Retirement Analysis action items will impact the information displayed within the estate analysis. Let's start by looking over the Flow tab. This page provides an accessible visualization of the flow of assets past the end of each client's planning horizon. The chart flows from top to bottom, with the left side displaying each client's taxable estate and the right side highlighting any assets held outside of the taxable estate. Within joint plans, the client who passes away first within the projections will be listed at the top. As you hover your mouse over the flowchart, you'll notice that certain tiles will hop as you scroll over them. This indicates that you can click into those tiles to see expanded data. In this way, you can glean greater insight into the assets that make up a client's gross estate, the expected taxes and fees that will reduce their estate upon passing, and more. For high net worth individuals, the taxes and fees tiles can be a useful tool in identifying if clients can expect any estate taxes upon their passing. RightCapital will automatically calculate federal estate tax if the gross estate exceeds the inflation-adjusted exemption threshold for the tax law that you're using within the plan. As a reminder, you can double-check and adjust your tax law setting within the gear icon, Settings, Tax Assumptions tab. State-level estate taxes may also be calculated based on state-specific rules. This will be based on the resident's state at the end of the proposed plan, including any primary home relocations. RightCapital will also capture any tax that may be due to other states for real estate held there, including vacation or rental properties. One last tip before moving on. By default in RightCapital, the first client to pass away will leave 100% of their assets to the surviving client. However, you can adjust this within the Account Assumptions, located within the gear icon Settings tab. Next, let's take a look at the action items beneath the flowchart. This is where you're able to fine-tune the details of a client's estate analysis. The action items are divided into 2 columns: Basic Information on the left and Trust Strategy on the right. As a starting point, you'll see each client's planning horizon, funeral expenses, and probate expenses listed in the Basic Information column. After updating one or more of these parameters, you can click the refresh button in the lower right to factor those changes into the estate analysis. For example, you can adjust the planning horizons to see what changes would occur if clients were to pass away at different times. Funeral and probate expenses will both be added to the taxes and fees tiles, reducing each client's estate before it's passed on. Funeral expenses should be entered in today's dollars. Your general inflation rate will be used to calculate the future value. Probate expenses are calculated as a percentage of the gross estate, excluding qualified accounts. RightCapital makes the assumption that qualified accounts such as 401ks and IRAs have beneficiaries assigned and will not go through probate. Jointly owned assets such as properties, businesses, and lifestyle assets are also excluded from probate upon first death. In addition to these items, you can also click the Edit button in the lower right to include several other items. The cumulative gift item allows you to reflect any gifts a client has made in excess of the annual gift exclusion, lowering the estate exemption threshold for that client. The gift tax paid item addresses a scenario where clients make gifts in excess of the annual gift exclusion, but choose to pay the taxes in the year the gifts are made. This item will reduce the estate tax calculated by the amount that you enter. The DSUE amount, or deceased spouse unused exclusion, allows you to include any unused exclusion a client may have from a previous marriage, increasing the estate exemption threshold for that client. Depending on what's relevant for a given client household, you can add or remove these items by checking or unchecking them on this list. Now that we've covered the basic information column, let's take a look at modeling trust strategies. By proposing a trust strategy, you can illustrate a scenario in which assets are moved from the client's taxable investments into a trust type of your choosing. This can be a powerful tool in demonstrating to clients how their estate tax burden can be minimized by moving assets outside of their taxable estate. To add a trust strategy, start by clicking the Edit button in the lower right. Within this drawer, you'll find an Add New Trust button in the lower left, which you can click to open a menu of available trust options. Choose your desired trust type, and a data entry drawer will open on the right side of your screen, where you can identify the parameters for the proposed trust. You can specify the asset value, which is how much will be transferred into the trust from the client's taxable investments. You can choose the year that you want to fund this proposed trust within the projections. And if you want to model the trust paying out income, you can choose an income term and enter either an annual dollar amount or a percentage of the trust value. After filling out each field, click Save in the lower right. Once added, you can include or exclude the proposed trust from the analysis within the Trust Strategy column of the action items. With the proposed trust included, all of the figures within the flowchart will be updated, reflecting the impact of that trust on the client's estate projections. This will allow you to see how much is held outside of the taxable estate, how much more the client's heirs will receive, and how much less the clients will pay in estate taxes as a result of your strategy. Do keep in mind when creating a trust strategy that you're not limited to a single trust proposal. You can rinse and repeat this process to add multiple trust proposals to the trust strategy area, allowing you to see the combined impact of two or more trusts, or to directly compare one trust type against another. Speaking of comparing trusts, the Comparison tab provides you with intuitive visuals clearly illustrating the benefits of your proposed trust strategy. There are two charts available here, the Estate Planning Summary chart and the Retirement Income chart. The Estate Planning Summary compares key metrics between the proposed strategy with your included trusts factored in and the current strategy with the trusts excluded. Here, you can directly compare the total asset value passed down to heirs, the total amount given to charity, as well as the total taxes and fees on the estate. As you continue to make adjustments to the action items, these values will update in real time. You can hover your mouse over the bar chart to see specific dollar values. The Retirement Income chart provides a breakdown of the client's various income sources during their retirement years. Trust distributions entered as part of a trust proposal will be categorized as other income, displayed in green within the chart. If the plan runs out of money at any point in time, an income shortage will be displayed in red. You can also quickly identify stable income, which represents the percentage of retirement expenses that are covered by income sources other than savings withdrawals. To the right of the Comparison tab, you'll find the Details tab. This page provides you with a breakdown of all of the same information found within the Flow tab. The assets that make up each client's gross estate, taxes and fees, total to heirs, and out-of-estate assets. The information here is presented via a more traditional table as opposed to the flowchart's dynamic presentation. Just like the flowchart, the values on this page will update as you make adjustments within the action items. In joint plans, the first client to pass away will be listed on the left, the second client to pass will be listed in the center, and assets held outside of the taxable estate will be listed to the right. Last but not least, we have the Trust tab, which allows you to see the annual cash flow breakdown for all irrevocable trusts entered into the financial plan. This includes existing trusts entered into the net worth section of the profile, as well as proposed trusts entered within the estate analysis. You can use this area to discuss annual trust balances, returns, taxes and fees, and distributions. In plans with multiple trusts, you can use the drop-down menu in the upper right to choose which trust you'd like to view. You can also click the blue download button in the upper right to export this cash flow table as a spreadsheet. A CSV file will be downloaded to your computer, which can then be opened in Microsoft Excel, Apple Numbers, or your preferred spreadsheet software. That does it for our overview of the estate analysis. If you have any additional questions about estate planning in Right Capital, please don't hesitate to take a look over the educational resources within our Help Center, or to reach out to our advisor support team for more details.